Very good evening, everyone. Charles here, Frgnt Daily Chart Analysis. I hope you're all doing well. I hope you had a good week last week. Just before I get rid of all of my positions from last week, or particularly the Friday positions, figured let's just do a quick breakdown of this US dollar CAD trade that I took on Friday, I believe. Friday the 10th of April. It's already journaled, but I've been lazy over the weekend and I haven't marked my charts for tomorrow just yet. So nevertheless, I could have also have done a video on this already, but it is what it is. It was a really nice picture perfect trade, which essentially went against my overall bias of the DXY. We'll come to that in a minute, but generally speaking, I didn't want to be selling the US dollar. Just jumping over to the DXY, just understanding what's going on even on the daily time frame was enough to almost put me off this position. However, coming to the chart on Friday, if we look at the 15-minute top left-hand chart, what we can see here is price was up and around this region when I got to the markets. Now, as I then marked that up and I said to myself, well, if I wanted to long a position on the DXY, which made sense across all of the time frames, as well as the fundamentals, particularly that weekly 50 MA, that thought process, but unfortunately that theory did not follow through. But nevertheless, I was expecting a rejection on the DXY towards the upside. So I asked myself, well, if I'm going to look for any long positions, where would that be? Now, if it isn't going to be in and around these areas where my crosshair was, if I wasn't going to look for a long here or here, down at these lows, then my anticipation clearly was that at some stage the DXY must show some bearish signs in the market. Now, although I didn't want to short a US dollar cross pair, this is why US dollar CAD just looked perfect in line with the short. Again, it would not be a long-term short in my eyes based upon the DXY confluences across the fundamentals and the technicals at the time, but nevertheless, it looks nice for the short, right? We can see on that 4-hour time frame, intraday perspective was looking nice. Here's that first low. We've taken a break. We've broken out of what was a very bullish uptrend of what we can understand as coming out of the DXY. As a result of this lower low, prices come back up into the lower high, lower low, looking for that lower high, lower low continuation. Doesn't mean I need to be in the market to take full potential from that continuation, but the 15-minute chart simply points a nice term out for us that close to in fact, no, it wasn't 2.7, I'll be honest, that was 2.5% banked, but 2.5% banked from a fairly straightforward position in the market is pretty good going in terms of business, right? So using that confidence as the DXY, understanding that price, if I wanted to do anything on the DXY, I mean, I certainly wouldn't short the DXY from here, but my only thought process was to long it. I've identified those areas in which that I would like to take a long position from. So that to me suggests that, okay, the DXY must come down. And with that said, US dollar CAD was aligning beautifully, particularly on the intraday timeframes, for price to want to move towards the downside. And just to go into that again, so we've spoken about the 4-hour time frame. Once we then have a look at the 15-minute time frame, we can see pretty much, I hate to describe it, but it's just beautiful in terms of price. We made that low, we came into that area, we've then broken the structure clearly to the left-hand side. So of course, the higher time frame directional position, as you can see by way of my 4-hour GAN box, supported also by that 4-hour 50 MA, was to price to come up into this area. However, once we then head over to the DXY, roughly similar time, around about just past London Open, you can see a confluence here for reasons why the DXY could look to short from that area. And that's exactly what I did. So I had some confirmation on the DXY, but more so, I've got my confirmation on US dollar CAD using the lower time frames. I'll be happy to go into that just now. So if we look at the fact that my Asia range criteria, I need to see a snap in the market, that's very clear. I need to see an order block available above Asia. Also very clear. Of course, now, do I know price is going to short from this order block? I have absolutely no idea. Could price come all the way back up to the higher time frame directional position for the short? Absolutely. There was a possibility for that too. But what I was able, or what I was happy to do, is understand that these are two very different entry techniques. These are two different strategies that I'm combining when I'm trading. I've got my higher time frame directional trade and I have my Asia range trade. So this for me was a textbook looking Asia range position, and that was taken. So now we can see price come into a valid point of interest. As soon as we then get that confirmed, we then go to the lower time frames, i.e. that 1 minute time frame, which for some people find a little bit noisier, but for me, once you understand exactly what you're looking for, that's where it all comes to light. So I'm really just looking for an intricate lower time frame 1 minute break of structure before I look to take that position. So price was very much so in its uptrend, and of course I quite agree that the main structure point was in and around this area. That's very clear to see. As a result of that high, this high low is the most recent structure point, so it's quite clear. So in order to take that position, let's say the best way, I'd have to see price break this area. However, in line with the Asia range strategy, you simply need to find a 1 minute break of structure, in my opinion, or the way that I trade it particularly, a 1 minute break of structure coming out of that 15-minute point of interest, providing that that 15-minute point of interest has not been broken and closed above on that 15-minute time frame. So as we see, price comes up. It gives us a little bit of an area just here. And for me, that was when I started to get a bit excited, particularly when price broke that area. So if I highlight it a little bit better for us, or here is the area in the market that I consider broken. As a result of that price then, or that area in the market then being broken, I've considered that a break of structure. What I've then done in the flip side was highlight some order blocks that I would feel comfortable to take the position from. So of course, if I get rid of this for a moment, we can see there's two order blocks. We've got one right up at the high. I think that's actually on the 5 minute, but you can see that's the one, and the 5 minute was around here also. And then it's just down to your risk. How comfortable are you with a bigger stop loss, for example, and what's your target? Now, for me personally, because I realize if I'm going to take this as an Asia range trade, my target must simply be the Asia range. So therefore, I'm not happy to have a significantly larger stop loss because my targets are fixed in this case. My targets are very much so down to Asia here. Now, for me, taking an Asia range position, more often than not, the way that I teach it is that 3% is really the minimum that you should be getting at the market. Now, I must say, it is a bit of a trading plan break for me personally because I was only able to get 2.5% out of the market. But I took price from in and around these areas, this highest order block right up at the high. So I said, right, if I'm going to take that position, at least take the position properly. Short from, or what I mean by properly is follow the trading plan out to perfection. Short from as high as you possibly can in the point of interest that you're looking to short from, once refined. And that's exactly what I did. So once price come back up into that area after this break, despite price tapping in, I was still confident that price was going to come back up. It didn't come right back up to the order book, that's what you'll see. But as a result of price even coming close to it, that was good enough for me to then select an instant execution and take that position. So I think that was a really nice position. And all of that as well is with the full confluence with the DXY, recognizing where the DXY was at that moment in time. Also, it looked like the DXY could well short from in and around these areas. Not that I would be looking to trade the DXY, just does it look good, right? Does it look good? So we can see we had that snap in the market here, and then obviously price come back up into that area. So we had also the support from other cross pairs such as GU. But nevertheless, to keep it nice and simple for you all and keep this video nice and digestible, the DXY, the catalyst of which really helped for that position in terms of confirmation and confluence. So I hope that shined some light upon what I'd say is pretty much a nice textbook trade, how you can trade against your higher time frame bias, of which of course I was higher time frame long bias on that DXY, and how you're still able to navigate the charts and still make some money out of the market if you know what you're doing. So thank you very much for listening, everyone. I appreciate your time, support across the channels as always, and you'll hear from me probably tomorrow at some point come London Open. Take care and enjoy the rest of your weekend. All the very best, Charles.